For those who don't know me, my name is William Gray. I'm the head of underwriting for our trade finance products, part of our short-term business team, which deals with our what we call classic bank guarantee products, the export working capital scheme and the bond support scheme, but also now the newly introduced general export facility, which I'll be speaking about right now. Just to begin and give you guys some background, Jack had very helpfully shared with me ahead of this meeting some constructive criticism on the part of EAMA with regards to UK export finance and some of the areas for improvement over the years. And, just to name a few, I think that not only have we come a long way over the years, just in general, but also as a result of the recently introduced GEF scheme, such as by handing more risk delegation to the banks, responding to bank and supplier and exporter needs more quickly, and most importantly, by introducing this new product. So let me share my screen with you guys so that you can see the presentation, and we'll go ahead.
Battery 100%. Connect.
Great. Can I get a thumbs up, Jack, if you're able to see that?
Yes, that's clear. Thanks, Will.
Perfect.
Yeah, you can come on. It's fine. I'm just listening to the webinar. Thanks.
Great, good stuff. Good to see people out there listening. All right. So if we start, the main agenda here will be to cover what the General Export Facility is, the eligibility criteria, what the key themes and attractions are of GEF, the ways in which GEF has helped to support SMEs, and lastly, and most importantly, how you as an exporter can access GEF. So the General Export Facility is a new product that's been created. Really, GEF was introduced as a means to provide support that is more flexible and competitive, that will help SMEs win international business with greater ease. As you'll see during the course of this short presentation, GEF is designed to improve access to UKEF's guarantee, give exporters more flexibility in the way in which they access that finance by making it non-export contract specific, as well as allowing them to support potentially domestic business needs for the first time, and also to give exporters, as well as their banks, more certainty about the level of support that they can expect from UKEF over a certain horizon of risk. So as mentioned, the main attraction of GEF is the fact that it does not need to be linked to a specific export contract. By comparison, our legacy export working capital schemes and bond support schemes allowed UKEF to provide up to an 80% guarantee to participating banks, but only in relation to financing facilities, whether there was a trade loan or a bond or letter of credit that were linked specifically to an export contract. This could sometimes cause issues as suppliers, tier 1 suppliers and exporters may not export all the time, so they may not try to access the scheme very often. In addition to the fact that sometimes the way in which certain contracts can be documented may not be sufficient for the bank's purposes or our purposes. For example, sometimes an export contract may not be fully formalized, may come in the form of an email or a purchase order, which may make it more difficult for your bank or UKEF to support it. What GEF allows here is that it opens it up and makes it non-specific to export contracts. Similar to the other schemes, though, UKEF is still only able to guarantee up to 80% of the bank's risk. That isn't for lack of appetite on our part. That is an OECD requirement for these guarantee schemes. Under GEF, we provide a maximum guarantee period of 5 years, which is actually quite lengthy. Under our classic schemes previously, we were limited to 2 years quite a few years ago. That's since been expanded to 5 years to allow us to provide further support. GEF is also designed to support exporter needs in the sweet spot of a facility of about £25 million. And that £25 million is in terms of UKEF's own 80% risk assumption. So in general, you might be looking at, on a 100% basis, a bank facility that might be around 31 million supported 80% by UKEF, giving you that 25 million risk there. Similar to our other schemes, GEF can be accessed most easily and directly through our main 5 partner banks, Barclays, NatWest, Lloyds, HSBC, Santander, and some of their subsidiaries. And as I'll go on to explain, we're also actively adding new banks to the GEF scheme in order to further expand the net of support that we can provide to exporters, including SMEs. Now, the eligibility criteria for GEF have been expanded somewhat compared to our usual schemes. In order to widen the reach of GEF and its ease of access, there are 2 main eligibility criteria to which prospective exporters must attest. Firstly, that export sales represent at least or represented at least 20% of annual turnover in one of the last 3 years, or 5% of annual turnover in each of the last 3 years. So there's quite a difference there. What that means is that actually the quantum of export sales that's required, one is viewed historically, and 2 can actually be relatively low, which should facilitate access to SMEs that are perhaps only just beginning the export journey and do, let's say, a relatively small level of exports at present. So really, that should be a huge assistance in allowing exporters to more easily access the schemes. Another main criteria is that the business, the exporter, must be physically located in the UK, have employees in the UK, and be paying taxes in the UK. The purpose of this criteria is to make sure that the exporter that UKEF is supporting through its guarantees isn't just a brass plate company, a post box based in the UK, but is an actual value-adding UK entity. Now, I know we're speaking to EAMA here, largely manufacturers, but through GEF, we intend to assist not only manufacturers, but actually a whole spectrum of industries. For example, not all manufacturers manufacture all their products specifically physically within the UK. You may well be a business that is chiefly in the business of designing products that are then manufactured overseas. And that is something that we can support so long as you meet these eligibility requirements. I will share this presentation after this session, but one of the links that I've included is to UKEF's approach to foreign content. A very helpful article that was published on our website in April last year that goes into minute detail on what is considered UK content and foreign content that should aid you in your internal discussions and your discussions with your banks about whether you meet these eligibility requirements. And if you're ever in doubt, of course, feel free to reach out to one of your local export finance managers, as I'll discuss in more detail later. One thing to bear in mind, by the way, in terms of meeting the export sales criteria, that's the 20% of annual turnover in one of the last 3 years, or 5% of annual turnover in each of the last 3 years. The thing to note there is that UKEF will not seek to validate that. That is a attestation that the exporter makes to the bank. So we won't be checking your work in that respect, but we expect you to make a good faith declaration based on evidence that you would be able to present. Now I'll speak about the key themes of GEF, i.e. the ways in which GEF should help you on your export journey by making it, well, firstly, more accessible. One of the criticisms put to UKEF by EAMA last year was that we should expand the delegated authority that we are providing to the banks. Previously, the main 5 banks which were participating on the bank delegation scheme were allowed to put the equivalent of UKEF risk of 2 million to us on an automatic basis if the other general eligibility criteria were met. Well, we've answered this criticism and have obtained approval that was put into effect, I think, in the 3rd quarter last year, to allow the participating banks to put up to 5 million of UKEF risk to us. And for GEF, we allow that. We allow a facility tenor of up to 2 years to be included on an automatic basis. As mentioned, GEF isn't tied to any specific export contracts, so it enables the bank to also access UKEF's guarantee to support an exporter's domestic business needs as well.
There's actually a pattern.
One of the things to bear in mind, however, is that on the 31st of March this year, the UK government implemented a new policy limiting the government, including UKEF's, ability to support certain coal, oil and gas, and fossil fuel related activities overseas. As a result, these sectors are now what are considered by UKEF as controlled sectors. Now, I'll speak in a minute about how this will not impact SMEs in the near term, but it's something to keep in mind as your bank and UKEF will ask you for further information on your turnover by sector and by geography if you are involved in any of these controlled sectors. We've also simplified the rules, or what we call eligibility criteria, through which our partner banks can access GEF. You may not see this directly yourselves on every occasion, but it does make your banking partners' lives easier as there are fewer bureaucratic strings to untangle in order to access UKEF support. And finally, another main attractive quality of GEF is the fact that it should allow exporters to engage in more long-term planning by giving you a certain degree of certainty over the amount of support that you can expect from your bank, because they will have the certainty of knowing that UKEF is standing behind them. In terms of flexibility, one of the main draws that I'd mentioned was that GEF can now allow exporters to access financing through GEF, i.e. UKEF's guarantee, for domestic as well as export business. As I'll go into reference, so far we've seen quite a few GEF facilities, and many of them have been, first of all, put in place to support near-term, quite urgent domestic business needs, with the idea that they will then facilitate export contracts in due course, or indeed feed into the wider UK supply chain, leading to a greater degree of exports in the aggregate for the nation. We've also expanded the types of facilities that banks can put to UKEF, ranging from simply, working capital loans, cash, to imports letters of credit, and then your usual guarantees, including advance payment bonds, performance bonds, warranty bonds, even bid bonds. Now, the specific facilities that you will be able to access via your partner bank will vary by bank. Certain banks may not yet be up to speed or willing to support certain types of facilities through GEF, but by and large, you can expect a relatively a seamless experience compared to accessing our classic export working capital scheme and bond support scheme. Also, as referenced, you can access UKEF by or your banks can access UKEF to greater risk levels and for greater tenors by submitting an application to us for manual inclusion. This is where there might be a GEF where the total amount of risk to UKEF exceeds £5 million and the GEF tenor exceeds 24 months. This doesn't mean that we won't support it. It just means that it can't be put to us by the banks on a fully delegated basis. It has to come into us for manual underwriting. And in fact, that's where it hits my team. Every request that comes in for manual underwriting lands first on my desk for my review, and then myself and my underwriting team will take a look, engage with you and engage with your banks, and see the ways in which we can support you. As referenced, we'll typically look at GEFs up to a UKEF limit of up to £25 million, and with a maximum GEF tenor of 5 years. And this leads to the topic of certainty. One of the main advantages of GEF and one of the criticisms of our prior schemes was, under our prior schemes, we may have been able to support, let's say, a bond or trade loan with respect to a specific export contract, but that left a certain level of uncertainty as to whether we might provide support again with the next export contract, let's say if a business had one upcoming within 6 months or a year. And we may well then have done another full manual underwrite, which would have added time to our review and approval process. What GEF allows is for the bank to apply to UKEF for a certain level, for a certain facility size, and for a certain GEF facility horizon, which they can then lock in for that given horizon, whether it's 24 months or 5 years, giving the bank, UKEF, and most of all yourselves, the exporters, certainty that our guarantee will be there to stand behind you for that full period of time, allowing you to plan ahead and plan for your financing needs. Also, because GEF is not export contract specific, UKEF will no longer be reviewing facilities on a contract specific basis. That's not a tautology. What that means specifically for you is that we will not be reviewing specific agents and agency agreements connected to export contracts. What this should allow is for banks to be able to put new risks to UKEF even quicker than before, removing a lot of the bureaucratic back and forth between UKEF and the banks. And as mentioned, our guarantee will remain in place for the tenor of the GEF facility agreed, notwithstanding certain changes in customer risk profile. Now, how does GEF support SMEs? And I think that that's very much the crux of this conversation, and is of critical importance to EAMA and its members. As I mentioned to EAMA, to Jack ahead of this call, UK Export Finance has generally supported about 70% of our companies have been SMEs. I think during 2019, 2020, 77% of the companies supported by UKEF were SMEs, and actually 88% were based outside of London. Interestingly, and especially for EAMA, 45% of the companies that we supported were directly involved in the manufacturing sector. In fact, I'd say the manufacturing sector is probably what we know the best. And so far, in I think the formal first month since GEF was operationalized with the banks in early February this year, we've actually already supported 7 GEF facilities, which have actually all been for SMEs, which has been a great start. And to put aside accusations that UKEF is purely an aerospace and automotive financier, I'll let you know that actually all of the SMEs that we've supported thus far have been in other sectors. We've had SMEs ranging from providers of entertainment and software services. So that's, looking at services, not necessarily manufacturing, but then also equipment and service providers for traditional energy needs, including oil and gas and renewable energy sectors, as well as the niche wholesale retail sector, equipment leasing service providers, and also even agricultural products. So as you can see, GEF is already expanding the net of sectors that UKEF is able to support. And in addition to the 7 GEFs that we've underwritten thus far, we have a fairly large pipeline of about 30 different GEF opportunities across the whole of the UK that are on our desks and that we're examining at present, including some GEFs that are already pushing the limits of the total facility size that we can provide, which is UKEF risk of up to £25 million. In addition, one of the other constructive criticisms from EAMA had been about making UKEF's guarantee more accessible. And we've heard you loud and clear, and as you know, it's a slow process, but we're getting there. We're now in full steam onboarding new banks and non-bank financial institutions specifically onto the GEF scheme in order to widen access to exporters and SMEs alike. And in fact, we've recently hired dedicated resources to allow us to be more agile in responding to these financial institution onboarding needs. Lastly, and perhaps most importantly, is how to access GEF. If you're an exporter out there, probably the easiest and most highly recommended port of call is to speak to your local export finance manager. On the next and final slide, I'll give you a link where you can check and see in which region of the country you can access a specific export finance manager. We have about 25 or 26, certainly over 25 EFMs scattered all over the UK and close to you. And we also have a network of IEFEs, which are international export finance executives located across the globe, who can also assist you with your foreign export contracts abroad. Next, and probably once you've spoken to an EFM, we recommend that you engage with your representative at your participating bank. EFMs can help you do that as well, and make clear to them your financing needs and that you're interested in accessing UKEF's general export facility. One of the things that you'll have to note with your banks since the 31st of March is any involvement that you might have in coal, oil and gas, and fossil fuel related industries. The banks will ask you a series of standard questions, but UKEF may well seek for some further clarity as well. One thing to bear in mind, actually, in case you didn't catch the news announcement, is that thankfully SMEs specifically are subject to a 1-year exemption from the fossil fuel policy that came into effect on the 31st of March. What that means for us and our banks is, although we'll still try to understand your fossil fuel exposure, is that we are able to support SMEs looking for a GEF while they still might be performing activities in the traditional energy sectors. And specifically with regards to GEF, that means that even if you were to approach us today for a GEF with a tenor of, say, 5 years, which goes beyond this 1-year exemption period, we will be able to support you for that full 5-year period, as long as our GEF support is approved during this year. In that respect, the final considerations are, as usual with our products, you do unfortunately still need to find a bank that is willing to retain at least 20% of the risk. UKEF can only assume 80%, as with our classic products. But you should try to take full advantage of the easier access to UKEF's guarantee through the bank delegation agreed with our 5 major banking partners. Once again, you can qualify for automatic inclusion for the GEF scheme if the total quantum of the risk being put to UKEF is less than £5 million and the tenor of the GEF facility is less than 24 months. And there you have it, everybody. In terms of next steps, we will now proceed to a question and answer session. please feel free to ask any questions that you might have. And if you're shy, we do have some stock questions that we're happy to address as well. But in the meantime, if you take a look at the screen, you can see that we've thrown up the link for our Export Finance Manager Network. Please make a copy and use that in order to check for your local EFM. There's also a customer service line and my personal contact details, as well as those of my boss, John Watson, who is head of short-term business. On that note, I'll hand it back to you, Dominique and Jack, and open up the floor to questions. Thanks, everyone.
Thanks very much, William. Please do post your questions in the chat or raise your hand if you'd like to ask the question directly on camera and on microphone. We've got a couple of questions, William, in the chat from Chris Buxton. First of all, why were coal, oil and gas power made controlled sectors?
Sure, Chris, and this is a pretty poignant question, and one that we've been asked quite a lot over the last few months. So, Chris, as you may or may not be aware, the Prime Minister announced in, I believe it was mid-December 2020, that the UK would be gradually phasing out and sunsetting support for international fossil fuel-related projects. Part of this, and I think the main thrust, is the UK government's ambition to become a world leader in reducing emissions and promoting green technology, certainly ahead of the COP summit in Glasgow this year. And part of that, unfortunately, has meant in the near term, this limitation on the UK government's ability to support international fossil fuel projects has come into effect. And that's come into effect starting on the 31st of March. And as a Department of Government, we have to follow that. As mentioned, SMEs are exempt from this policy for 1 year, so through to the 31st of March 2022. During that period, we can support a GEF or up to a maximum tenor of 5 years, so long as we receive the application and we approve it within this 1 year exemption period. In other words, before the 31st of March 2022. With regards to exporters that are non-SMEs, there are a series of considerations which will render slightly more difficult our ability to provide certainty around our level of support, as there are a number of different exceptions and tests that have to be applied, and indeed full exemptions from the policy, such as I think one of the main exemptions is around the transportation sector, relating to infrastructure such as automobile, rail, aerospace, etc. And one of the things that we can include as well is now the public guidance that exporters can refer to on their fossil fuels policy.
Thanks, William. We've got quite a few questions coming in. Very briefly, I think Chris has also asked what kind of domestic business is supported, presumably that which supports the export effort. So I think maybe just clarity on the issue of domestic support.
Yeah, sure, Chris. So one of the key differentiators between GEF and our classic schemes was that under our classic export working capital and bond support scheme, we did provide support to tier 1 suppliers. In other words, those are entities supplying directly into an exporter for onwards export. That has now changed. So under GEF, we are able to provide a guarantee to banks to support loans, bonds, and other trade finance mechanisms related to domestic contracts, even where they are not being directly linked to an export. Just general business as usual, with the belief that they meet the minimum export sales criteria of 20% in the last financial year or 5% in any one of the last 3 financial years, with a view that us supporting just this domestic business will, in the aggregate, be conducive to wider exports across the nation.
That's really helpful, William. Thank you. We've got a hand up from Mark White. Sorry, Chris. Got a hand from Mark
No,
Weisberger.
that's all right, Jack. I was just saying thank you.
From Mark Weisberger. Mark, have you got a question?
Yes, thanks for that excellent presentation. I just have one question. Is there any formal credit rating or credit assessment threshold that customers have to pass before the GEF can be accessed? I'd heard some rumours that one had to show a probability of default below a certain level. Is that still the case? Because if it is the case, I think some SMEs might struggle to pass that threshold.
Sure, Mark. And what's your background? Are you from a bank?
Combination banking and law and export as well.
Very good, Mark. It sounds like
I know your boss, John, from a few years back.
Okay. So this is a targeted attack, and Mark, your resume makes you sound like probably the most lethal combination of adversary. But no, Mark, you are correct. So there are two minimum thresholds, only one of which is really formalized out there, and they intermesh. So in order to access our schemes, the banks still have to attest to the fact that the exporter has a 1-year probability of default rating that is not worse than 14.1%. What this means in your traditional kind of letter grade risk rating world is the equivalent, and it's a rough scale, but the equivalent to S&P B minus. That is about the minimum threshold of our risk appetite. Now, there have been wider discussions across government about whether that risk appetite threshold would be expanded to include companies with a probability of default worse than 14.1, equivalent to an S&P rating of about CCC. But that hasn't progressed. So it remains the case that our risk appetite remains exporters with a probability of default of 14.1% or better.
Thanks ever so much, William, and thanks for the question, Mark. I'm going to take that away and think about it and look at that in the more very specific detail. I've got a question from Adam Hatfield, and then come to Group Roads. So Adam asks, are there UKEF costs for exporters using GEF, or only, close quotes, the bank's costs?
Okay, Adam, and hopefully I don't misunderstand the question here, so correct me if I go off track. Yes, so UKEF services are not free, unfortunately, even though you pay taxes. You still have to pay my salary, right? And you have to pay the salaries of my underwriting teams, unfortunately. But in terms of the cost, UKEF takes a certain cut. So we take the respective amount of our guaranteed percentage from the bank's fee. So if a bank were to give you a trade loan, for 2% or however much per annum, we would take 80% of that, just keeping it simple. So part of the cost that the bank charges you does come back to UKEF, but UKEF does not seek to gross up the fees that the bank charges you in order to accommodate our minimum pricing standards. Like any financial organization, we do have a minimum price that we need the bank to meet so that it can be cost effective for us. But we're not a profit-seeking entity, even though we do return a positive return to the taxpayer. So accessing UKEF schemes should not make the proposition more expensive for the exporter unless the bank is, and very rarely, undercharging you. But that is very rare.
There's one or two points I could come back to there, William, but maybe at another time. Group Roads is a question.
Thank you, Jack. Hello, William. It's Mark Ridgway at Group Roads. We've been UK Export Finance case studies in the past, and Louis Taylor's been to the business. I also am chair of EAMA, and congratulations on the way in which you remodeled the GEF product. It really has improved accessibility, I believe. But one issue that we are facing as a business is that as accessibility is improved and we have this non-Pacific export contract over a period covering 5 years, etc., banks are becoming much more particular, especially the improved global compliance now, or increased global compliance, especially referring to one of the sectors you mentioned, aerospace. And whilst we have the second largest aerospace sector in the world, anecdotally, after the US, it is becoming a challenge now as to where we can export. And getting UK export finance is actually easier than getting bank approval sometimes on some of these sector sales. Do you have any observations on that at all?
Yeah, interesting the point you make up. Back in the pre-COVID world, me and my team sat across directly from our colleagues in defense. And still in the post-COVID world, we have very active discussions. In fact, I had quite a few earlier today with our teams in defense, which now includes space and maritime as well, regarding accessibility for these sectors. Personally, my team has underwritten a number of defense support for defense manufacturers, mainly ground-based defense vehicles. But one of the things that we've noticed is you are correct. When it comes to these sectors, UKEF may actually be more risk tolerant than some of the banks. We've noticed in particular, and I hope that the other banks aren't on the call today, is that when seeking bank support for defense exports, we find that generally Santander and Barclays are probably some of the more risk tolerant banks when it comes to these sectors, whereas the others are probably more risk averse. And I know that my colleagues in defense, and you may have spoken with some of them, Joe Shepard, Pat Corthery and the like, are involved in active discussions and inquiries regarding how to improve the situation with the banks.
Thank you.
Thanks very much, William and Mark. Matt Rogers asks, are there any geographical areas that are not covered by GEF? And I wonder if I could tag on to that. This is an issue that's come up several times in the recent months. Is there a difference between the EU and other countries in GEF's in UKEF's outlook and on with the GEF?
Yeah, sure. Thanks, Matt. Good question. Well, in terms of geographical areas which GEF doesn't cover, unfortunately for those of you out there who might be seeking to dodge international sanctions, we won't help you in that respect. And GEF is not the product for you if you're looking to export to nations such as Cuba or North Korea. But for everywhere else, which is not sanctioned, GEF is a great solution. We don't have any preferred geographies, so to speak, other than sanctioned territories. We would look to support exports wherever possible. In terms of the question specifically, Jack, that you'd raised regarding whether there's a difference between other countries and the EU countries, there isn't. GEF's scheme can still allow you to access finance for exports to EU countries just as it did before. However, and totally divorced from the GEF scheme, you'll need to consider on your own, specific day-to-day export business level whether there may be new export hurdles and bureaucratic hurdles that you need to overcome, such as perhaps obtaining an export license where perhaps previously, pre-Brexit, you didn't need one. But in terms of accessing GEF, we are, indifferent to the EU countries. We'd like to continue to support exports to the EU.
I'd like to ask one question myself, William, if I could. If your bank doesn't mention a UKEF or GEF in relation to your export activity, or seems disinterested, what's the best thing to do?
Yeah, good question, Jack. In that case, I would tell you to find another bank manager, find another bank representative, because they're not giving you the answers that you need. But in all seriousness, as an exporter, I would raise it with them. It's entirely possible that your banking manager isn't aware of UKEF. They might sit, in a silo in the bank where they've never heard of us, and therefore never heard of GEF. And so if you don't get traction with your bank manager, your best port of call is to reach out to your local export finance manager, who will have the connections with the right ECA-facing individuals within the bank in order to make your bank manager aware of UKEF and the JEF product.
Thanks very much, William. If there are no further questions, I'll just make one or two comments finally before closing the webinar. Your last question was really useful. I'd like to think that businesses on the call would be thinking how UK export finance can fit into their export strategy. And I'm also very keen, as I mentioned in the introduction, to get feedback from companies. We've had a lot of feedback, which has informed the paper that you've seen. Always keen to get some more, which we use in confidence. And as I say, my email is in the chat, at the head of the chat. This is part of an engagement with government, which EAMA and its members have generally in promoting exports. A lot of EAMA's members are very active in this area and supporting their sectors and their members. In terms of a call to action, I said 2 years ago, and I think I'd say again, if this is of interest, as William said, please do get in touch with your export finance manager locally. And apart from that, it only remains for me to thank Dominic and William from UKEF, and most of all, everybody on the call for your participation. Thank you very much. And Dominic, I think we'll close the meeting.
Thank you, Jack. Thank you, Dominique.